we have a true treat today with Dave Allred being on the show. He's somebody that I've looked up to over the years, and super excited to break down a lot of what you've been doing, Dave. Before we jump in, I'll give everybody a quick bio on Dave and what he's been up to. So Dave had a 17-year career with one of the nation's largest security companies, Vivint Smart Home. He served 8 years as a regional vice president of sales, followed by 3 years with Vivint's sister company, Vivint Solar, where he led hundreds of sales reps. Dave contributed to Vivint ultimately going public at a multi-billion-dollar valuation. Dave has created his unique lifestyle by design, which helps individuals create a life of freedom and purpose, which I'm really excited to dive into. Dave has over 15 years of real estate investing experience and is the co-founder and managing partner of Axia Partners, a real estate investment firm based here in Salt Lake City. He's also built a personal investment portfolio of over 1,000 units by the age of 40. So super stoked to have you on, man. Welcome to the show.
Thanks, Chase. Excited to be here, man. Let's do this.
Yeah, this is going to be fun. So something that I've kind of asked all my guests is to talk a little bit about your upbringing and how you think your upbringing, maybe your early years, your teen years, impacted who you are today and kind of directed you into the career you went and the life that you decided to live.
Yeah, definitely a strong correlation there. So I grew up in a small town in central Utah called Manta, Utah. It's about 2,000 people. And I grew up in a very low income, blue collar home. And when I say low income, I mean like very, very low income. And, had a dysfunctional family for sure. My sister ran away when she was 15. I ran away when I was 17. Moved into a really crappy little house. It was $250 in rent per month, right across from Snow College, and lived there. My brother decided to be emancipated when he was 17, moved in with me, and so I, was kind of looking out for him. And so we lived there, just my brother and I, for 2 years. And it was pretty crazy times. We were living off of ramen noodles and fast food, honestly. I just I saw a lot of things that I wasn't really happy with, and that I knew I could do better in my life later on. And I remember as a teenager, around 16 years old, just really making that firm commitment that in my life I was going to completely reset the standard, and I was going to do whatever it took in my life to be able to, not just for me personally, but my future family, to create quality of life, to create more impact, happiness, success, just to really win at life, and I was really grateful for that, man, because having really embraced that and committed to that at an early age. I fast forward a few years, and like when I'm going to Snow College and they have a recruiting booth set up to go out and knock doors for Vivint. Yep. Nobody ever wants to go be like a door-to-door sales guy, right? Sure. But I saw it as an opportunity to be able to, go out and create, a lot of income and be able to really learn those skill sets to be able to get ahead in life. And so anyway, that's a whole other story. That's like the next chapter, right? Yeah. But jumping into the door-to-door sales space. But, as a kid, it was just, that's where we grew up. I know we went to national parks. Every vacation was a national park, and I just thought my parents loved the outdoors, but really it's because it's free. I think we went to Yellowstone like 16 times. And so, but I'm sure my parents did the very best they knew how to. It was what it was, and we never talked about finances or business or money or any of that.
Yeah, got it. That's great. I feel like the vacation thing in Utah, growing up here as well, it was like the kids who had a ton of money were in Hawaii every year. The kids who were kind of in between were Disneyland. And then, when you were on the lower end, it was the national parks and kind of going to visit those areas. But that's great. So when you made that decision kind of in your teens that you were going to create a different lifestyle for yourself than what you've been used to, what do you think was the driving force? Was that something you feel like you were born with, or that developed over time just because of your circumstances?
I think that I don't think you're born with it. I think it was more, I've always been very ambitious, and I've always been very goal oriented. So those things may have been, more, born with. But I think I was just looking at the circumstances and like, I'm not okay with this. Like, I know I can do better than this. And, one of my all-time favorite quotes, and, it's from Jerry Rice, and I had a poster in my bedroom, actually, and it had a picture of Jerry Rice, and then it has this quote. And it says, today I will do what others won't, so that tomorrow I can have what others can't.
Love that.
And I really just internalized that, man. And I really, frankly, I've lived my entire, even my professional career has been around that, right? It ended up being a 17-year career at Vivint doing door-to-door sales, which is probably one of the hardest ways to go out and make a dollar.
Yeah.
And then jumping into what I'm doing even now. It's just always been really embracing that delayed gratification, that concept.
Yeah.
The law of the harvest.
Right.
We don't always reap what we reap what we sow, but it takes time. And so I think, I'm really grateful for having that understanding as a teenager, because not a lot of teenagers can really grasp that. But realizing, hey, I've got to go make some real sacrifices to be able to get out of this, this lane that I'm in right now, and to be able to really up level and upgrade in my own personal life.
Yeah, love that. I feel like I had a very similar experience. There's actually one day we were out in the backyard with my parents putting in a retaining wall, and I remember it was just long weekends working in the sun and manual labor with my dad, and it was grateful for the experience. But I remember telling my mom, one day I'm going to have enough money that I'm gonna pay someone to do this myself. And at the time, I feel like it may have come off a little bit ungrateful for the experience, but that mindset of, I want to be able to create an opportunity and enough financial, well-being that I can utilize those resources to free up time for myself, and be able to contribute that into more high-value activities.
And I love you said time there, because a lot of times we're focused on just on money, like financial freedom and wealth. But the reality is, I think what's really inspired me is I want to not just be great at business, but I want to be great with my family, right? As a husband, as a father. And so having that time freedom that comes with, having some success financially was actually a big motivator for me as well.
Yeah. So I want to dive into your story, Dave, you mentioned your teenage years, having kind of that decision made that you were going to be successful. So walk us through, graduating from high school, going to college, and starting at Vivint, and kind of how your career unfolded over that 17-year career with Vivint.
You bet. So spent 2 years on a service mission out in Peru. Came back from that, going to college, Snow College. They had a recruiting booth set up there with, Krispy Kreme donuts out. And so walked over, grabbed a donut. They invited me to come to a recruiting meeting at a pizza place that evening.
Nice.
And, I'm a poor college student. I'm like, dude, I got a donut, got pizza, let's go.
Why not?
Jumped into it. And they recruited me to come out to Chicago, and I knew it was going to be tough. But frankly, it was by far the hardest thing I'd ever done in my life. I'd always been relatively successful at whatever I committed to, but Chicago, that was so hard. My first week was ridiculously bad. My first month was, I was failing miserably. Halfway through the summer, my roommate actually got shot. Somebody sniped him with a .22 caliber in his calf muscle while he was out working. 80% of our team quit. I thought about quitting every day. Really every hour. It was just, I was right there. And, luckily, so a regional manager came out and talked about how if anybody did 100 accounts, they could come back and be a sales manager the following year.
Okay.
And something clicked for me where I was like, hey, I could actually make this into a career. I could become a leader of men. I could become a better leader, learn a lot of new skill sets to really help me out and get ahead in life. And so I doubled down, decided to just go all in the last 2 months of the summer. And I finished really, really strong. So the 121 accounts, made $31,000, which for me was, and still is, probably the most important money I've ever made in my life. Sure. It was more than my parents had ever made, and I came back and bought this Isuzu Rodeo, rolling around Snow College. Thought it was pretty cool, but it really just kind of set me up to come back the next year and then be a manager. And I made $156,000 as the top first year manager, year two, and that was the second most important money I'd ever made, because it really broke that limiting belief system of, like, I always thought, hey, maybe I can make $100,000, like best case scenario, if I played my cards right in business and life and my career, right, and make $156,000 a year too. I was like, wow, okay, it just really expanded my perspective. And but I look back, and then that led to, the next year as a regional manager, then a VP of sales, and just this really incredible career for 17 years. But if I look back at that, man, like if I would have quit, and tucked my tail between my legs and like most guys were doing, it would have completely changed the trajectory of my life. Like completely changed it, right? Yeah. So it's pretty crazy looking back in hindsight. I've got 4 kids now. It's actually one of the lessons that I'm really trying to teach my children. And on Sunday, we sat down for an hour and talked about this specifically is, how important it is. Like one of the best skills in life is just the ability to make good decisions. Decision making, where we get in life really is just an accumulation of the decisions we make along the way. Mm-hmm. And the higher the quality of decisions, then the faster we're going to be able to get to the end destination that we're headed towards, we're fighting for.
Yeah, I love that. That's great, man. And so my brother is he started a pest control company called Allred, and he was telling me how guys are quitting left and right and giving up and just how frustrating it is. But I love the endurance you showed, and really explaining that the decision to stay and make that money was what was the most important money that you made. And I feel like every entrepreneur has kind of that point in life where you have to decide, like you're going through a struggle, and in hindsight, it's always such a blessing to go through that struggle and to push through that. And so that's great, man. Well, going from Vivint, so you were with Vivint for 17 years, and what was the catalyst to you ultimately leaving, and kind of how did you build up, to that decision and go from there?
Yeah, so Vivint, so again, it's going to be a 4-month summer. It turned into 17 years, and it was an incredible experience. Managed 121 sales teams across 41 states, and you got to work with thousands of sales guys. And what I miss about that the most is it's just the camaraderie of that, and also how focused we were on development, like being able to help, teach these new guys how to come in, how to sell, how to recruit, how to become leaders, how to become managers, and just that trickle effect of the impact of helping these young, ambitious guys become leaders, mm-hmm. and not just financially, but just the leadership impact. And it's really fun right now running into people weekly, like, hey man, I remember back, 17 years ago or 12 years ago when I was in this office with you, and just the actual impact that makes, down the road, the ripple effect from that. But yeah, so the entire time I was there, I was always aggressively taking that active income and putting it into passive income, because I talked to my CPA when I was, after that first year as a manager. Mm-hmm. I'm like, hey, what are all your wealthy clients doing with their capital? And he said, especially to help mitigate taxes, and he said they're all investing in businesses or in real estate. Yep. And I was like, oh, real estate sounds cool. I don't know anything about it, but I'm gonna figure it out. Yeah. And so I just committed myself to becoming a student of the game of real estate. And so the entire time I was making that high income, it was aggressively moving it into these passive income streams. And when I was 30 years old, I'd been talking a lot about wanting financial freedom, mm-hmm. but there's a big difference between wanting and being committed to it. Yeah. And so I sat down, I spent 4 hours, and I just wrote out the entire blueprint. So, and it's pretty straightforward. I said, okay, number one, what's my current cost of living? And let's just say as an example, say it's $200,000. Okay. The next line item on a spreadsheet is, what's my current passive income? Say you have a duplex or fourplex, mm-hmm. or some dividend stock. And so say you had $50,000 of passive income currently. The next line item is, well, what's the difference? Like, what's the gap? Yeah. Right? So say it's $150,000. Sure. And then it's simply saying, okay, well, how many years am I willing to commit to achieving true financial freedom? And for me, it was 10 years. Okay. And so I was 30 years old until age 40. And so then the next step was, okay, well, so I need $15,000 per year, over a 10-year period to be able to achieve this goal of $200,000 of passive income. And so, I love real estate. So I was like, okay, well, how many doors and how many rental properties do I need? And it was, I need to have 40 rental properties by age 40. And so I internalized that, changed all my passwords to 40 by 40. Nice. My background on my iPhone, 40 by 40. And I just went to work on that. I had a ton of intentionality and purpose behind why that was important to me. Yeah. And it was a fun process, man. I just got after it and hit that goal when I was 36 years old, and celebrated for about an hour, maybe a day. I was like, nice, man. All right, well, what's next? And what fired me up was to go out and get ownership in 1,000 rental properties. And you talk about hairy, audacious goals, right? Dude,
like 40 to 1,000 is a big jump.
But I feel like I had some confidence and some competence, and I'd built out a team of advisors, mm-hmm. and some experience there. And so that's when I retired from the door-to-door sales industry. So it was back in 2017, completely stepped out of it and went full-time into real estate.
That was at 36 when you hit the 40 or shortly thereafter.
36. Okay. 36. I decided to go full time in the real estate game, and it's been an awesome experience, awesome journey. Hit that goal of 1,000 doors when I was 40.
Wow.
And I started to do a lot of what's called syndications, which is where you bring in, other people's capital to take down one individual deal. Mm-hmm. So there's a lot of big multifamily deals. I love apartment multifamily assets. Did a bunch of those, created value for several hundred of my friends. And then, and the syndication model is beautiful because you're creating real value for people, bringing them into these big commercial deals. Otherwise, they wouldn't have exposure to. Mm-hmm. And you're basically removing those barrier of entries to let these, a lot of my friends, and by the way, all of my investors right now, over 400 investors, are my friends. It's my social network. Like, I've never paid for a lead. I've never
That's the way to do
marketed it, publicly. It's just word of mouth and focusing on creating value for people that I care about. And so, but then the natural progression from the syndications was, well, what's next? And my whole life's going to be like, what's next, right? It's like, okay, hit this goal, like, what's next? And I feel like if you can always be doing bigger deals than yesterday, you're always going to be expanding and making that forward progress, and not just making more money because the deals are bigger, but you're also around other people doing big deals, and that proximity is really exciting. It's energetic when you're around, guys are doing bigger and bigger and bigger deals. And so that's when I decided to jump into the fund world. I'd been investing into real estate funds, and I fell in love with that model because of the diversification and how much it protects the downside risk for the investors. And so, about a year and a half ago, we went full time into the fund structure.
That's great, man. So there's a lot to that we can unpack there. So on the initial 40 units and that goal you set. So I just turned 30 last week. So I feel like this is pretty.
You're only 30?
I'm 30, man.
Wow, man.
Just turned 30. So I just turned 30 last week, and I think the audience of this podcast, I'm hoping, is, young guys and gals who are entrepreneurial focused, want to invest in real estate, want to build passive income and financial freedom. So I want to dive in a little bit to that. So you're 30 years old, you want to hit 40 units by 40. And it sounds like your strategy was taking active income and deploying it into passive investments. So what I've struggled with is like, man, I would love to create a portfolio. I've got one rental property right now, but I'm like, dude, I'm not, at least, in my last job, I'm not making enough money to just buy, another 40 units by the time I'm 40. Like that's a lot of down payments. That's a lot of, capital to get out to make it make sense. So was it that you were just making enough money from pest control or from doing Vivint, from security, to be able to deploy that and get to the 40 units by 36, or how did that all shake out? Like, if you could dive in a little bit more into how did you come across these deals? How did you fund them? How was it, that you were able to scale that quickly?
You bet. Yeah. So, it definitely helps to be able to have a little bit of capital to get started with, but, and I will say this, before I answer your question, I just want to share this as a kind of a little nugget for your listeners. So many people right now in the market are trying to do what's called bootstrapping, where they basically don't have any money, but they want to come in with that creative financing and, seller financing and whatnot, and get started in real estate. And you can still do that, but with the market now turning and things really softening up and potentially even going a little bit in the negative, it's not the right time to be taking that approach where you're just going to bootstrap it, right? Mm-hmm. When the market's going up a ton every year with equity, that makes more sense. But right now, just being really honest here, like, I wouldn't try bootstrapping in real estate. Like, my best advice is to go, try to really increase your active income, your earning ability, right? And ultimately, what that really means to me is, dollars follow value. And so if you really want to make more money in your job or in the market, just figure out how to create more value, to be more valuable, right? And because the dollars will always chase and always follow that value, the creation. And so, really focus on that. I think going into sales is great. Every one of my 4 children, they know that they're expected to do a full year of door-to-door sales.
Really?
I don't care how affluent or how much abundance we may have or may not have. Like, they have to go out and do it. Why? Because salesmanship is the most valuable skill set. I would say salesmanship and leadership.
Yeah.
But those are two of the most invaluable skills that you can possibly have, because they really make an impact. They move the needle, right? And leadership is not just in business, but it's as a father, as a husband, across the whole spectrum.
Yeah.
And so, I want to say that, like, my advice usually is, hey, go increase your income first. Then, once you have enough, you kind of stack and rack, you've stacked that cash, then look at jumping into real estate more full time. The only exception to that is investing into your education. Like if you need to go to a real estate mastermind or real estate, by podcasts, conferences, because ultimately the most important real estate is the 6 inches of real estate between your ears.
Yep. Like
anything you can do to invest in that 6 inches will give you the greatest ROI or the greatest dividend long term, 100%. So with that being said, going back to your question on how I was able to scale so quickly, part of it was being able to infuse new capital, but actually the bigger part of it was really paying attention to the equity that I had in my assets. And a lot of people don't do this. And this is a little more advanced, but I'm gonna try to keep it really simple.
Yeah.
And that is, most people pay attention to your cash on cash, which means how much cash you invested into the deal, and you divide that number by how much cash flow you're making, like your net cash flow, right? So that's called cash on cash.
Yep.
With inflation going up and market rents going up, that looks really good because your cash flow is going up every year, right? And so we get complacent with that. Luckily, one of my mentors taught me that an even more important metric is looking at cash on equity. So that's taking your total equity in the deal, which is going up with, the market every year. And it's also going up with the fact that your principal pay down on your mortgage every month. So every month you're paying down a portion of your principal on your debt. And so your cash on equity is dividing that net cash flow by your equity in the deal instead of your initial cash going in the deal. And what's happened is, with the market going up so high, is your cash on cash looks good, but your cash on equity is actually going down. Right? Yeah. And most people don't pay attention to that. And so it's a great problem to have, because it means you built a lot of real wealth in the asset. Right? But instead of sitting on that deal, and this is very relevant for anybody listening to this podcast right now that has any real estate that they've owned for a substantial amount of time, there's probably a ton of equity in the deal. And so what I would do is, after about 2 to 4 years of ownership, and that cash on equity drops below about 5%, I'm then going to 1031 exchange that asset into a bigger deal. And a 1031 exchange basically just means you can sell a piece of real estate and exchange it into a like kind, like another property. Yep. And it defers all taxes. And so there's not a taxable event happening. And so what I did, and this has been really powerful, so like the first townhome that I bought for $100,000, 3 years later is worth twice as much, $200,000. Yep. So I would sell that 1031 exchange into a fourplex, right? And that fourplex was $500,000. But the 25% down payment was satisfied by all the equity in the townhome, right? Got it. Owned the fourplex with no extra cash out of pocket, went from 1 door to 4 doors, owned that for 3 years. It's now worth $800,000, $850 to be exact. 1031 exchanged that into 3 fourplexes with no cash out of pocket, because now I have all that equity going as the down payment. So now I went from 1 door to 4 doors to 12 doors. 4 years later, those fourplexes that I bought for, I think it was $750, were worth $1 million. True story. Yeah. Now I can sell one of those one fourplex and get 2 to 3 new fourplexes in Boise and in Phoenix, Arizona, and in Magna, Utah. Right. So it literally went from, long story short, basically went from, 1 door to over 40 doors. Yeah. Right. With just paying attention to that cash on cash. Now, that's a little bit of an illustration, a little bit of exaggeration in terms of like the exact timeline on it, but the concept was very powerful. It was 1031 exchange. I call it the velocity of money. So you're making sure that equity is working for you, and you're scaling up. And the reason why it's so important, to wrap this up, to be scaling up and always doing bigger deals, is because there's 4 ways to make money in real estate: cash flow, appreciation naturally in the market, depreciation, all the tax benefits, and then the principal pay down every month. And so if you have one little townhome versus 44 townhomes, right, you're getting more cash flow, you're getting a ton more appreciation, getting more depreciation, and much larger principal pay down every single month. And all 4 of those things create true wealth in real estate.
That's amazing. I mean, for everybody listening, the amount of value that Dave just spit out there, I mean, that's awesome, man. Because I've always, for me, I mentioned I've got a rental property, and I probably have, bought it in 2020, so there's probably $150,000 of equity sitting in there. But to hear you explain, return on equity versus cash on cash return, that's a concept that I agree with you. I don't think many people are thinking about, because really that's your true measurement of where you should be, is that return on equity. And if that's de minimis, you got to think about putting that equity into another deal and multiplying your
You got it.
projects.
That's been the one thing that's really helped me scale my portfolio more than anything else. Just paying attention to cash on equity.
Yeah.
And I think it's even more relevant right now today because we've been sitting on these assets that have been appreciating. I mean, Utah's appreciation rate was 21% last year.
Yeah.
So there's a lot of real equity in a lot of these deals.
Yeah.
But I also love, again, reiterate, it's always scaling up, right? So it's going from a townhome to fourplexes, and I love fourplexes. I've owned 27 of them.
Wow.
But then going into multifamily, right? And was a 20plex, then it's a 62plex, then it's 100 plus, then it's now 427 units in Dallas. You know, it's just always doing bigger deals than yesterday.
And I love how you laid that out because, to your point earlier, bootstrapping, I think there's a lot of, you've got bigger pockets and you've got a lot of these very creative strategies. And not that those are bad or that they don't work, but I've always been very hesitant to be like, man, I'm going to go in and do like a crazy BRRRR method or house hack or something that you got to get really creative, hard money. And I think to your point, first step, increase your active income. Go find a way to triple what you're making now or quadruple what you're making now. And that's probably through sales or something entrepreneurial or something where you have some control over what you're making
100%.
every month, right? It's going to be tough. And before I started Park West, I was in a salary job where it was salary and bonus, and it was very confined to like what I could make and hence kind of the limitations there. But if you go start a company, work in sales, your upside is unlimited. And I think that's a really good strategy and a great way to kind of keep it in the family or keep it to yourself to some regard. Because if you're going out and doing, these really creative ways to get a deal across the finish line, a lot of time you're either giving up equity, you're having to pay the price some other way or what you should perform. But for you, Dave, you've been able to build a Dave Allred portfolio and doing it through the way that you just described, which is great.
And I just want to add also, in addition to that, so sales is great because you can earn more income potentially, but also it teaches you so many life skills that are super transferable into real estate, right? Yeah. So, good communication, how to overcome objections, salesmanship in the first place, psychology, interpersonal communication. Like these are all real world soft skills that are super valuable, man. When you go into a negotiation on a $20 million multifamily deal and there's other parties, throwing their name in the hat, like knowing like how to be a power negotiator and the intricacies of the sales funnel is super valuable, man. So that's why, like for me, that's what I want my kids to be doing, to have that experience more so than the earning income. It's those life skills. Yeah.
Love it. Okay. So you get to 40 units, you then start transitioning into syndication and raising some funds and getting to 1,000. So maybe dive in a little bit more there from the 40 to 1,000. Was that with investors? So via syndication, how did you kind of structure those deals? Where were they located? And how did that path look from 36 to 40?
So a lot of those are on my own, right? So I kept doing the 1031s and more fourplexes and, some smaller multifamily deals.
Okay.
But what I learned from the CEO at Vivint, Todd Peterson, mentor of mine, he always said, hey, anytime you go into a new space, then you always want to identify the top 1% to 2% of the people in that space and try to get as much proximity or partnership with them. Because not only will they operate with excellence, but they're going to introduce you to the rest of their circle, like their advisors and how they do their business. And so what I did was I went out in the market and I found I'd say number one, but top 3 in the country for sure, this gentleman out of Texas, and I was really honored to partner with him. His name's Joe Fairless. He runs Ashcroft Capital.
Yep.
Blackstone just did a $1.7 billion deal with him, and so I came in with him, and we started doing a few deals together as co-sponsors.
Nice.
And I think he did 3 or 4 big deals with him, and so that really helped me to learn the ropes with how to do a syndication the right way.
Yeah.
And I could really do it professionally and with excellence.
Mm-hmm.
And so after those wins, then I started doing more on my own, and expanded into doing some self-storage syndications, some inline retail, the Top Golf that we're helping bring into Utah County here. I'm really proud of that and that's been a 5-year journey. And my partners and I, it's been I've learned probably more in real estate from that experience than anything else I've done. Right, just full send on that project, but. Sorry, I lost my train of thought there. So syndications, and then doing my own syndications, and I just love the ability to be able to bring in, but honestly, 5 to 20 of my friends into these deals. And a lot of people are like, well, Dave, why don't you just do these deals on your own? And the honest answer is you can only have so much dry powder. Yeah. And so, if I did all these deals on my own, I couldn't do more deals. Yeah. And so the power of leveraging other people's money is you can create real value for them to come in on these incredible opportunities, but you're also preserving some of your own dry powder to continue to keep doing more and more of these deals. Yep. And so that's one of the real big benefits of doing a syndication to begin with. But the downside, and I love the model, the downside is just that, when you have a syndication is one single address, and versus on a fund, like with Axia, we have, in our first fund, as an example, we had, 6 different assets, 3 apartment complexes in Nashville, Kansas City, and Orlando, and then self-storage assets, and then we have RV parks in 2 different states. So we're actually in 7 different states across 3 different asset types. And so it really creates true diversification. And the statistic on that is that you're 2.7 times more risk by investing in a single individual real estate deal than you are in a United States real estate fund. Got it. Right, yeah, because of diversification.
Sense. Sure. So let's dive into Axia. So you get to 1,000 units. You're doing some syndication. You're working with some of these bigger sponsors. What made you decide to start Axia? How did that come about? I know you've got some awesome partners with Aaron and Jeremy and Adam, and we're working on a deal together. Park West and Axia are working on a development deal in Salt Lake City. Which should be an awesome project. But help us understand, why you started that and how it all came to be.
Yeah, so a few reasons. So the reason why we launched Axia Partners is mainly because I realized that the risk profile, we were 12 years into this incredible housing market. And it's not a matter of if, but when there's going to be some choppy waters or a full, recession or at least a correction. And so realizing the risk profile is lower in a fund structure, and and also on a syndication, I can only bring in usually 5 to 20 people. On a fund, our first fund we had 156 partners come in, and so you can create value for a lot more people. But I take a lot of pride in the fact that out of all the real estate deals I've ever done, I've never once lost a single dollar of investor capital, not $1 on any real estate deal. And I'm really proud of that, and I want to maintain that reputation. And so I felt like a fund is a great way to be able to mitigate that downside risk. I call it asymmetrical risk, right? So in investing, it's all about not losing. Warren Buffett says, rule number 1 in investing is don't lose your money. Rule number 2 is don't forget rule number 1, right? Yeah, I love that. And so it was going into saying, okay, the market's pretty frothy, and we're 12 years into this. Yep. So how can we create real value for our partners with strong upside yield while still protecting the downside risk? And so we went into all about recession-resilient commercial real estate. I'll go into that in a second some more, but the reason why was because 1, protecting our investors' risk. 2 is being able to create value for a lot more people. 3 is I realized that things got very competitive in bids, like on multifamily especially, where we had sometimes in Atlanta we had a deal and there's 62 bids or written offers on the deal.
It's crazy.
And as a syndicator, you always have to get the deal under contract. Then you go to your investors and raise the capital, which is actually pretty stressful because you got under the clock, you got your due diligence, your earnest money, risk. And I realized on a fund, we can be fully capitalized and go into that competitive bid. And we have a huge leg up because we already have the money. We're ready to move. We can close quick, and we're already funded. And it's a lot less stress as the capital raiser. Yep. So that's kind of what drove us towards the fund model. And one more thing, I've always been a solopreneur. I've always done everything on my own, really. Mm-hmm. And, I realized that, going solo, you can go fast, but to go far, you've got to have a team. Yep. And to really do something big, right? I kind of feel like I'd maxed out what I could personally do with my 168 hours in a week, my bandwidth. Mm-hmm. And so the collaboration, I was actually nervous and exciting to go into partnership where now I have all these managing partners and my friends. But man, Chase, I got to say, it's been such a beautiful process. It's been a beautiful experience because now I have a bunch of like-minded guys that are on the same mission, same wavelength, and it's really fun to have that sounding board, the collaboration, and the synergy that comes from working with your friends.
That's awesome. Has it been harder than you've thought to raise capital? I know you guys did your first fund, $20 million. You're now in the process of raising your second fund, which is $40 million. How has that process been? Has it been harder than you thought, easier than you thought?
I'd say it's been, our first fund was a lot easier than expected. So it was a $20 million equity raise. We oversubscribed by a few $1 million within a few months. So it happened really quick.
Yeah, that's great.
And then with leverage, we got about, $50, $60 million of assets. Yeah. Our second offering was a beautiful project with the Montage Hotel and the Pendry Hotel with the 19-hole Arnold Palmer golf course around it.
That's so cool.
Incredible. It's like the premium destination luxury. That's awesome. And so that one's gone really, really well. Capital raise was pretty easy on that one as well.
Yeah.
And we just barely turned our sights, about 2 months ago on the current fund, the Value Development Fund. It's a $40 million equity raise. I'd say we've got good momentum on and everything. I do think that with, a recession and with all the volatility in the market, in general, people maybe pucker up a little bit. Mm-hmm. They're a little bit more cautious there. But I think we have a huge advantage where our investment thesis is recession resilient commercial real estate. It's all about mitigating downside risk. So, people are worried about this, where the market's going to go. I think we're actually perfectly poised and positioned to really capitalize on a potential downturn. So I would say overall, I've been very impressed with that, and also proud. On that first fund, we had 100% of the investors that said they're going to come in actually come in, which was really incredible. And I think a big part of that was the fact that we're committed to what's called experiential investing. And so we do a lot to actually educate our investors. It's not just, hey, let's help you get a good ROI, a return on investment. It's let's get you an ROI first and foremost, but also an ROE, a return on experience, or a return on education. Yeah. And so every month we have these experiential webinars where we have the best guys in the country come on and speaking and teaching about real estate. It's almost like a real estate mastermind for free for our partners. And that's been received really well. When we have a deal and we close on it, for example, the warehouse deal that you and I are doing together, we do a full webinar for an hour and we show how we source the deal, the underwriting, the model, how we source the debt, the entire process. Mm-hmm. And so it's really just pulling back the curtains and showing with full transparency how we do what we do. And a lot of our investors have loved that, man, because they really they want to be doing these type of big commercial deals. They just don't have the competence or the confidence to be doing it. And so it's kind of a fun way for me and my team to be able to create, it's a unique value proposition to add more value for them. My point there was, getting 100% of the subscription documents converted into actual wires was pretty incredible to us. And I think that was really a testament to the value of that experiential investing commitment.
Yeah, I think people really appreciate that. And that is really unique because a lot of the sponsors now are just, hey, send us the wire. Here's a 20-page deck on the deal. We'll talk to you every quarter.
I'd say it's extremely unique. I've yet to see another investment firm in the country that's committed to education and really that level of transparency. I mean, most funds, you send the wire off and then it's like the gates are closed. Like there's no visibility into the back office and the actual underworkings behind the scenes. Yeah, that's something we really want to kind of change the game.
That's awesome. Well, you guys are crushing it. It's been fun to see. I mean, it's been so cool to get to meet, you and the partners and just to see how you guys are set up, your office and the whole team. It's been awesome. I'm really excited for you guys. I know Fund 1 has been an extremely successful, and I'm sure Fund 2 will be the same. So that's great, man. Well, I wanted to shift a little bit. So I've heard on other podcasts when you've done speaking events talk about this lifestyle design and how you have tried to design your life in a certain way to be very intentional. I'd love for you to touch on that, Dave, and kind of help the listeners understand how you approach your overall lifestyle and how you've gotten where you've got to be with that.
You got it. And we could do a whole podcast on that.
I know,
so
it's tough.
I'll try to keep it really high level.
Yeah.
But, I just feel like most people go through life and they don't really have a real true north or exactly how they would define a life well lived. And, I lost my mom a few years ago and completely unexpectedly, 59 years old. And then my dad was diagnosed with Parkinson's about 9 years ago. And, that's a really tough disorder where, he's got the shakes and it's debilitating, it's chronic, and it's degenerative. And so, kind of experiencing both those things have really made me think a lot about, my life and the meaning of life. And when I'm at the end of my life, looking back, like, how will Dave Allred define a life well lived? How will I live a life with no regrets? And to this point, Chase, I can honestly say I have no regrets in my life. I have many lessons learned, but not regrets. And I want to be able to say that, on my deathbed. And so I've thought back a lot on, okay, what exactly does it mean to live a life well lived with impact, creating a legacy, and really adding more value than I take. And so about a decade ago, I ended up sitting down and I'm a spreadsheet guy. My wife makes fun of me because I have spreadsheets on spreadsheets for everything.
I'm the same way.
So it started out just one spreadsheet, and it's evolved into 10 different tabs. And it's the 10 areas of my life that I want to be great at. And, the first one is my mission statement. So I have an entire paragraph of what, I want my life to stand for, my mission. I have my guiding principles, my core values, and then my non-negotiables, which are the 10 things that I will not compromise in my life. Mm-hmm. And that right there alone, I think is really powerful, man. Where how you want to live your life, what the guardrails are, both what you will do and what you won't do. And then the next section is family, and then it's time, and it's health, finances, business, spiritual experiences, and relationships. Because I feel like I want to be great at all those things. A lot of guys are really good at having experiences, but they're really bad at business, or they're really great at their health, but they're terrible on their relationships. And so I'm not going to act like I'm great at all of these, but I'm doing my best to become the best version of myself in each one of those categories. Because, it's not really fun to be too lopsided. You really want to be great at all of those. You want to be winning in all of those categories. And so anyway, so I wrote these down and basically just spent the time to get super clear on, how I would define winning in that category, and then just reverse engineered that to the habits that I should be doing daily to make sure that I'm on track for that. And it's been a powerful exercise for me, man. And it was about 10 years ago, but this document, it's a living, evolving document, right? So if I read a book and I love, a takeaway, go to a conference, have a mentor, teach me something powerful, I'll go back and I'll actually add that to this lifestyle design. And so it is, as I evolve and I learn more, then this document's evolving with me. And I even created one for my kids this summer. It's called the Youth Lifestyle Design. And it's been really incredible as a dad to have my 4 kids go through that entire process, those same 10 chapters, and outline what they see as the best version of themselves later on in life. And not to go on a tangent with parenting, but man, to me, I'm not going to be around when they're in college, and I'm not going to be there to micromanage them in the future. Yeah. But if I can help them see the best version of themselves and how they see themselves winning in life and not having any regrets and how to make good decisions, man, I think half the battle's won right there.
That's amazing. How often are you pulling out? So I've actually implemented this in my life. So I know you've got a template, and I'd love to share that with our guests if you're willing to do that. But it's awesome, man. I've got it printed out now on my wall in the bathroom with the 10 categories, and I'm bulleting out how do I how do I create this vision for my life? And it's been really helpful. But how often are you looking at it? Is it something you look at every week or monthly? And how do you set specific time frames around some of those items, or is it more like, hey, this is the vision?
Okay, a lot of good questions there. First one, right now, I look at it probably once a month,
okay,
right? Because I've got it pretty internalized.
Sure.
But when I first got started, I'd say for your listeners, you probably want to, really do like an unload everything, the first time for a few hours, and then probably like every Sunday, like once a week, go back to it and really just like download all your thoughts, your ideas, and whatnot. But right now it's about once a month, and in terms of time, making everything time-based on that. No, I don't do that because for me, it's just really getting clear on like the end. So it's really like long-term. It's very, very long-term, the majority of it. The habits though, on the bottom of each section, it says, key habits. That's the most important thing. And that's what I want to measure on a daily basis, on a weekly basis.
Okay.
But a lot of times people hear this stuff, Chase, and they're like, man, that's so much structure. Like, I don't want that kind of, that's too much for me.
Yeah.
I would counter that with what my favorite author, Jocko Willink, Navy SEAL Team 3 says, and his book is called Discipline Equals Freedom. And what I found is that when you have the discipline to know that your health's taken care of in the morning, your family's taken care of, all these key important things are taken care of. Yep. It opens up so much more flexibility to then go out and dominate it, whatever else you want to be doing. People ask me all the time, like, hey Dave, how can you have ownership in over 60 restaurants, run national real estate, all your syndications, help bring this Topgolf in Utah County, father of 4, traveling internationally every quarter. Like, how are you able to do all that?
Yeah.
And it really comes down to, for me, it's knowing that the important things are taken care of. Yeah. And kind of a best practice for me right now is every Sunday, I'll sit down for an hour, and I call it a power hour, and I plan out the entire next week. But it's not based on what's urgent; it's based on what's important, right? So I look at my calendar, and I'll say, okay, so what's most important to me in my life? It's first, it's family. So I'm going to make sure that every Monday night we have family night. Every Tuesday it's Sushi Tuesday with the kids. That. Every Thursday it's a kids date night with one of my 4 kids. That's fun. Friday night's date night. Sunday is ice cream Sunday. It's a fun little tradition we do. Nice. But I've got these, it's not a lot, but these key parts where I know I'm there for my family. And ultimately, kids measure love, time. It's not about quantity. It's quality of time with the kids. So anyways, that's the first thing. The next thing is, okay, my health. So every morning from 6 to 8 a.m., I have what I call win the morning routine. And it's, waking up, it's working out 45 minutes, a cold shower, a cold plunge, prayer, meditating for 10 minutes, reading for 20 minutes, and a little 10-minute power hour for the day. Sure. Make sure everything's prioritized. But anyway, going back to, and then the next thing is Axia. Next highest priority is Axia. So make sure I have my time on my calendar. So you can call it time chunking, but you're chunking out your time for the week based on what's the highest priority and not what's urgent. Yeah. And it's a really important distinction, man, because most people wake up and they're like, okay, what's urgent? Where are the fires I've got to put out today? Yeah. But a lot of times when you do that, you're neglecting what's really important, and you're actually just creating more fires down the road. Yeah. And so, anyway, so go back to your question on that. So we look at it once a month. It's actually very fluid because I know what I really want, but I also love the flexibility to be able to kind of do, as life throws opportunities at me, or something changes. There's a lot of flexibility with it, so it's not rigid. Yeah. But it's just knowing at the end of the day where you really want to go. And again, the fact of the matter is, if you know what you really want, how you define the actually, Iron Cowboy, good friend of mine, we all know James Lawrence, right? Probably the toughest man on the planet. Yep. He has an incredible quote. I'm going to mess it up. It's something like, okay, don't choose your path, then accept your destination. Okay. Choose your destination, then accept your path. Yeah. That's it. That. Actually, no, that's money. I nailed it. Well,
but, yeah, we can edit that. That's good.
That's that's really the summary of this whole thing is know the destination and then just reverse engineer with intentionality around how you're going to get there. Because most people are very reactive versus being proactive, and they just meander through life, based on however they feel or whatever's thrown at them. Yeah. I'd rather be in the driver's seat and really in control of my life.
I think, man, you hit on so many good things there. One, the the differentiation between what's important and what's urgent. I recently read a book called The One Thing, and they talk about that. That's basically the whole concept of the book is you got to think about what is the one thing that you need to do today that's going to have the most benefit for you throughout the rest of the week or the rest of your year. And a lot of times, so what I do is I've got Grant Cardone's 10X planner. So every day I'm waking up and I'm writing, goals and to-dos, and it's really hard to not just make a big list of just urgent things like I got to do this or this or this, but a lot of times they're just menial tasks that don't move the needle. So I think that's a really good point. Blocking out, hey, this is the most important thing that I need to tackle. Last thing I want to talk about, Dave, is you are very well networked. You are part of masterminds. I just heard you speak this last week in Miami at the Scale on Escape event put on by Kent Clothier. Talk to us about the importance of network and surrounding yourself with people who are kind of in the same mindset as you.
Yeah, I mean, they say that your network is your net worth. I'll start by saying, again, when I was young, I would have defined success as like having made $100,000 a year, right? Mm-hmm. And then when I end up, hanging out with the executives at my former job, and basically billionaires, close to it, and seeing how these guys operate, and being able to spend a lot of time on a private jet flying around, and being able to just see how their mindset works. And I'm really grateful for that because, if you can look at a guy eye to eye in the white of their eyes and be like, wait, if this guy's doing that, okay, it can't be that hard.
Yeah.
Like that's really been inspiring for me. So I'm grateful for the opportunity to have that proximity. Proximity is power. And so just being around guys that are doing way bigger things than I'm doing is really inspiring for me. And on that note, like when I was 20 years old, I was really proud of what I was doing. When I was 30 years old, I was really proud of what I was doing, running all these teams across the country. But now at 40, looking back at 30, I'm like, man, I was playing so small. I could have been doing so much more, and I hope that when I'm 50, looking back at being 40, I'm like, man, you're playing small. You could have been doing so much more.
Yeah.
I hope that when I'm 100, look back at 90, I'm like, man, you were still playing small. And so, ultimately, I define, winning and success is as the pursuit of finding the best version of yourself. And I think that commitment in life of always pursuing the best version of yourself has really been fun for me, because what I've found is that I'm the happiest in my life when I have forward progression.
Yeah.
When I'm making progress, when I'm becoming a better version of myself, I feel the most fulfilled and the happiest. It's not when I'm retired or when I'm, a lot of time on my hands. It's actually when I'm really productive. And so, one of my personal goals in life is to always be on the fringe of my comfort zone. And I know people hear that and they're like, man, what the hell are you talking about? Like, why would you want to intentionally be uncomfortable?
Yeah.
But I really feel like that's important, man. I feel like that's where we evolve. That's where we evolve and we develop. And so, I always want to be a little bit uncomfortable. In my career, a lot of times it's been just taking a big bite and even not knowing how I'm going to chew it, but just take the bite and then figure it out afterwards. And you learn a ton through that process. But I think going back to masterminds and whatnot, I'd actually never been in a mastermind until about 2 years ago. Now I think I've been asked to be in 7 of them right now.
I bet.
And it's been really fun though, man. It's there's a lot of energy that comes from being around other people that are like-minded and be able to create value for them as well. I was hanging out with Ed Milet and Andy Frisell last year, and we were at a steakhouse, and Ed Milet said, "Hey Dave, the only difference between who you are today and who you're going to be 12 months from now is 3 things. It's the books you read, it's the podcasts you listen to, and the people you spend your discretionary time with." And when I heard that, I'm like, okay, that's pretty basic. Like, I get it, right? Mm-hmm. But the more I've thought about it, Chase, that really is what affects us, like who we are and who we're becoming. And so, I think that just really being selective on people that you surround yourself with is really powerful. And I always just want to be, hanging out, whatever I want to accomplish, like my next step, I want to be around people that are already doing that.
Yeah.
Because they're going to be a good example for me. They're going to show me the way. Right. So, but it's also a lot of work. You're always kind of up leveling, you're always, and frankly speaking, man, like sometimes it's hard because like I have a lot of friends that maybe, I love them and I love my relationships there. Yeah. But at the same time, like if they're not going to be pushing it too, and they're not trying to get to that next level, then it's kind of hard sometimes, but you've got to like make that decision strategically, like, or consciously, like, hey, you know, who do I need to be spending time with to be able to really help me get to where I want to go? Does that make sense?
Yeah, totally. And I agree with that. Over the last, so for me, I came out of BYU and went to corporate America, and being in, like, I guess, you know, quote unquote 9 to 5, it was really hard to feel like I should be joining like a mastermind or networking with, you know, entrepreneurs who were trying to scale up, because I'm sitting there at a desk, you know, banging it out every day. But since I've made that shift, I've truly seen the benefit of surrounding yourself with like-minded people who want to scale up, level up, grow a business. And that's a big part of this podcast. And we talked about this a little bit before we started recording. You know, being able to have someone like Dave Allred on the show and sit across from you for an hour and talk through your successes and just trying to absorb and understand the information as successful as you've been, it's extremely valuable.
And what's really fun there too is because you build those relationships, you know, you invested into those, then when that's reciprocated as partnerships and investments and whatnot.
Yeah.
Like, you know, we look at our Axia fund right now, and dude, I'm so grateful and feel blessed with who we have in our fund, like the smart money with us, right?
Yeah.
I mean, you got like Jim Quick, you know, the foremost expert on brain memory and optimization. He's a partner with us. You know, Bobby Castro, you know, he sold his company for $1 billion, and, you know, Joel Marion, same thing. Dan Fleshman, the youngest guy ever to IPO a company. And, you know, Brandon Fugel, you know, everybody knows Brandon's name here in Utah. His name's on literally every large listing, and for him to come in as not only an investor, but also a strategic partner with us on this fund. You know, there's a long list of you know, smart money involved, and it's really fun, man, because again, it's I love the expression that says, who you do life with is who you do business with. Sorry. Who you do business with is who you do life with naturally, right? Because that proximity, you end up just, you know, you're creating value for each other. And anyway, it's been awesome, man. So I would just summarize it by saying, to answer your question, if you look back, if you ask Dave Allred, hey, what have you learned in the last 20 years in your professional career? Like, what's the number one takeaway that I've really learned that's really kind of blown my mind? And it's the power of mindset. Like, limiting beliefs are a real thing, especially when you grew up in you know, kind of like how I did. It's like, there's so many things in our mind that tell us we can't or we shouldn't, or they create fear. But being able to, you know, slowly remove those and really just focus on the positives and really creating a strong mindset has been, frankly, probably the biggest key to my success, and really what I try to share with other people in these opportunities, like on a podcast or with my friends or my family.
Well, it's been super valuable, man, and you've shared some really amazing nuggets of knowledge, and it's been great having you on. I guess last question is kind of what's next for you? I mean, what do the next 10 years look like for Dave Allred as you're trying to scale up, and what are some of your goals?
Good question, man. I love that. Next 10 years, I would say, so we launched the Allred Family Foundation with my kids. They're on the board of directors. Really fun helping teach them how to give back and be involved in that process. You know, we got the Top Golf project that's opening up here in December here in Utah. Really excited about that project. I mean, what I'm mostly excited about right now is Axia. You know, things are going so well, and love our team, and you know, really just growing our investment firm to becoming a multi-billion-dollar investment firm in the future, and, you know, taking care of our investors' capital and just really growing that opportunity. I'd say that's what I'm most excited about professionally. And then lastly is just, you know, really trying to be a great dad and husband to my family. At the end of the day, that's what's really, you know, most important is it's the family and the impact you make on the home front. Besides that, man, just living life all out, a lot of adventure. I got a strong bucket list of experiences I plan on knocking off. And you know, as I mentioned at the beginning of the podcast, like, what I love about real estate and what I love about, you know, working so hard is ultimately, really, it's about freedom. Right. It's about creating true freedom in your life to be able to be doing what you want to be doing with people you want to be doing it with when you want to be doing that. You know, it's not just the financial freedom, it's the time freedom. And so, you know, just continue to expand on that and living life all out, man.
I love it. That's great, dude. Well, thanks so much, Dave. It's seriously been a pleasure having you on. I think this has been extremely beneficial for everybody on, and hopefully look forward to doing it again down the road.